Welcome to TradeTheMBI.com. This is John. This report is for the 14th of February. Well, all it took was the recognition that, of course, inflation is higher. As much as they could adjust it, it wasn't enough to still show that, yeah, in fact, things are still rising in price beyond expectations, or at least what their expectations were. We all know it's worse than what the actual release numbers are, but this is why we point out the simple details. We had this positive extreme that I mentioned, and that was the low target on a sell signal. And where did we close? Oh, geez, within 1 point of that. We dipped down all the way to the 76%, and a little bit of a breach of the ABM green, just minor. And then all of a sudden that kicked in buyers. And of course, that was the whole point of having the positive extremes, to understand that's where they're going to pull things back to before turning it around and going from there. And it wasn't anything hyper dramatic. Yes, it did create a significant decrease in the MBI reading here, from a magenta now being well under 33, below yellow, negative, rising shorts. So that short buildup that started to take place here faded off, resumed, wasn't quite enough, and then it just took a little news, and once people started running for the exits, it gets parabolically quick, because we know that markets fall much faster, 66% faster than they rise. And this was the bond market realization. We've been talking about these guys being way on the wrong side of things for quite some time, and it always works out in the end. They realized, oh, yeah, we made a mistake. Rates should be higher. Yeah, so now they are. And that's going to draw resources from the market, because you can obviously go to treasuries for safe yield without any risk of, takes like the other day. It's simple as that. But this is the problem right here. So it's oil. As long as it remains in these ranges, it's just way out of line for containing price movement, and this idea that you'll absorb at a certain level and that will ease off inflationary pressures. I'm just not buying it. It's never been the case. When oil gets below 50 and that, yeah, you see a massive push in the economy, and you don't see an inflationary pressure with it. So it's an interesting phenomenon. Kind of violates what economists think, but hey, what have they been right for most of the time? I mean, for the last 15 years, have been going against the grain of a lot of what they say, and we've been right more often than not. When we're looking at the euro, again, we talked about what a joke it was as these things rise. It gets difficult for them to maintain this, because there's a real problem in the eurozone. Had to fill that positive extreme that was all the way down here at the 106.9. We dipped to 107 even, yeah, just about. So a little bit more softness there. We'll fill that positive extreme. We still have another one to go, all the way back here, down in the 105.6 range. And then it gets into that trouble zone again, where you have behind the scenes liquidity issues, and that really can become significant. The surprise shocker, and gold moving opposite direction to what you would expect from a rise of inflation in that. And again, we've talked about this, paper derivatives of the actual metal versus the metal, two different worlds, and you're able to do a lot, which was what the whole point of putting crypto on ETFs and futures. Gives you the ability to do a similar kind of thing, a little bit tougher with Bitcoin, because there's just a limited number of them. And that wasn't much of a fade for Bitcoin. Came back, filled right back in. In fact, the catalyst for going higher is exactly what that inflation reading is. So as long as inflation remains high, a move towards Bitcoin, definitely, or any of the other more limited cryptos that are of popularity. ETH, another one, also did exceedingly well within that move, finished a little bit higher than Bitcoin relative to its move, and popping up again. So you can look for that to continue, and so while there was skepticism before, you've weeded out a lot of that fraud and everything else that has been a holdback, and as it moves towards more unified mainstream, it's been what, decade plus that it's been working to do this. It becomes more of a viable option now from a 50K standpoint. It could see the breakdown started there, and even before that, it was everything was moving along nicely, and then all of a sudden DOC spread that caused the long to exit, caused the short to activate, the short activation all the way down to the 0 point. Nice beautiful run there, and then it reactivated for a secondary run to take another little bite out of it, before things turned around a bit. And it's fairly decent at this particular stage. Intraday wasn't anything too shocking. We were sort of soft in the pre-market, and then things just started to get a little bit panicky for some. And in the light liquidity pre-market, with the expectations what they would be, and it pretty much floated there. And then they broke down to lows. And this is checking supply, seeing how much soft hands exist. And then late day, boom, rally right after the close there so that they can take advantage of trapping any shorts necessary. And that's what gives you a nice little short squeeze. All in all, good stuff. So very exciting and in line with our expectations. We were looking for increases in volatility, and we're starting to get them, which is the expectation given the uncertainty element. As it begins to rise, so does the volatility, and I think that just promotes itself, and we should see a continuation of that, particularly with the uncertainty of what readings may come forward. And then, so we continue to follow the key readings and that, but we're on the right side of everything on this, so just keep going with what is. Um, you have some weakness built into it, but overall the bullish trend is still intact, so nothing has changed. Have a good one, trade well, and enjoy your Valentine's Day.